Good morning, good afternoon, good evening, wherever you are in the world. My name is Dr. Deepak Narayanam. I have been at different banks globally, Axis Bank in Africa, HSBC and Barclays in Europe and UK. Today, I'm going to talk about a specific topic around the banks. How AI ready is your bank? Even though it says your bank, it applies to all organizations. So I'm going to touch upon some of the practical maturity model for data foundations, governance, and the commercial value. So let's look at the unequal starting lines in terms of the banks are not equal. It doesn't fit, one size doesn't fit all. Right? We have the traditional banks, we have neobank, digital banks, fintechs, and large commercial banks. So I worked in most of them, so I have a fair idea about how they work across. Right, particularly traditional banks have the siloed, legacy data, and they have a high technical debt and the fragmented governance. Right, but neo and digital banks, they are very cloud native and agile data lakes, but they're struggling with the regulatory scale. Particularly in the banking sector, highly regulated. Fintechs, their AI is the product for them effectively, right? They're nimble engineering, but vulnerable to market shifts. But whereas the large commercial banks, they have a massive historical data, but very slow to productionize the machine learning. So the geographical maturity is also there, divide in terms of the west and east. You can think of. I worked across geographies globally, US, UK, and Europe. Highly matured markets. The challenge there is the explainability and bias is one of the area we need to focus there with the regulations, and also the innovation versus the risk. The risk mitigation is a big challenge there. Whereas the evolving markets in the Asia, Southeast Asia, and Africa, where I worked heavily, the aggressive technological leapfrogging is very, very there, right? Skipping traditional banking for digital wallets is also there, and there's a lot of challenge with the financial inclusion, and also the unstructured data and unavailability of the data is a big challenge. So the ambition gap, if you look at it, what banks say they have right today, we have about 20 to 50 localized AI pilots and a heavy investment. We have done a lot of investments in AI vendors. We have board level AI mandates. This is what most of the banks say that. But what is actually lacking? No trusted data foundations, no governance discipline, and non-measurable P&L value and linkage to the P&L. Right? What is the result? The 70% of these AI projects fail to deliver. Right? So they don't deliver any value, business value. That's the outcome. So if you look at it, AI readiness is not a technological problem. It is an enterprise transformation challenge. Your bank doesn't need more algorithms, doesn't need more infrastructure. It needs trust, governance, and commercial operating model. That's the keyword. So if you look at the three pillars of AI readiness, we are talking about the people, which is the core, even though it is often neglected. Where you look at the upskilling, retaining the top talent, and building the GCCs. We see that lot of global capability centers to scale the operational excellence, etc. And the capabilities like robust data architecture, infrastructure, moving the higher data quality scores using various DCAM, CDMC frameworks, right? And what is the purpose? Defining clear strategic alignment, moving from the pilots and AI tourism, we call it's simply is the pilots doing, to actually ethical and revenue generating use cases, right? If you look at the data maturity curve, this is the foundation. Data foundation is very, very critical for the AI readiness. This is the EDM Council's DCAM model. If you look at starting from 1 to level 6, 1 is like pretty much is been there for decades, but most of the organizations are level 2 or level 3, right, where they have conceptually created things and they're in the developmental stage. But coming from level 3 to level 4, which is basically defining the data management capabilities and establishing all of that with the stakeholders, etc., that's where the real challenge, that's where the chasm, you see the biggest gap or biggest time it will take. Once you are defined, it's not that difficult to achieve. And once you achieve, you can actually enhance and optimize it. So this is very critical to achieve the data maturity model or data maturity curve. right? And the next one is AI maturity ladder, right? If you look at the first one, level one is like data aware. Everybody is talking about AI pilots, right? So piloting the AI projects, isolated pilots, they are doing it. And level two is governed analytics. Most of the traditional banks and most of the banks do the analytics, which is in the data framework, DCAM framework, data capability assessment model framework, and enterprise enabled is a level three. This is where the cross functional hub will come into picture, right? This is where we have to go from level 2 to level 3, and then level 4 is where you operationalize. You need to build hundreds of models in the production, not in the pilot or POC phase or in the sandbox, etc. And the last stage level is agentic enterprise, right? You need to look at autonomous workflows. Even though we are talking today agentic AI, it's not really there. Without having these level 2, 3, and 4, we cannot really directly jump into the level 5, which is the agentic enterprise, right? Easily it will take 18 to 24 months starting from level 2 to level 4. However, level 5 can take a bit more longer. So looking at these 8 dimensions of AI ready bank, the data foundation, we talked about data foundation. Second is the governance and control. Third is the architecture. And fourth is the engineering, which is ML ops, LLM ops, AI ops, CI/CD, all of that. And fifth is the operating model. This is the very, very critical one as well. Hub and spoke model and product squads, and embedding this into the data stewards and into the business, right? And the sixth is the commercial value. This is where you're linking it to the P&L, and then you have the metrics that you measure the value, not the activities. How do you monetize this whole thing, right? Number 7, trust and ethics. This is where the whole UA Act and even the UK Act and US, all of these coming into picture, the consent, transparency, and explainability and responsible AI, right? And auditable as well. The last one is agentic AI, autonomous workflows, and intelligent decision automation. These are the 8 pillars of dimensions of AI ready bank. So if you look at, I'm not going to go to all the details, but if you look at the foundation one, is your data trusted? The lineage, ownership, who owns the data, where is it coming from, and how do you, check the data quality? Do you have automated rules, etc.? The foundation is very, very important, the first one. And the second one is also very important in terms of the governance and control. If you look at the NIST risk management framework, the high, above average, and moderate, these are the risk tiers, right? Lot of the banking use cases fall under the moderate to average, above average, and high, right? If you look at the credit decisions and anti-money laundering, they are very high risk. Above average is like fraud detection. If you look at moderate, is the customer chatbots, etc. Without this governance, AI is just operational risk at scale. That's a major challenge for the compliance and risk teams. If you look at the dimension 6, the most critical one, I'm giving some numbers here, examples, where like 4 use cases you can see the what is the investment you have put in and how long you took it in order to productionize and get the realize the value. You can see the fraud detection where you reduce the false positives, and also you detect and prevent the fraud, right? Similarly, credit scoring has been there for decades, but now with the AI use cases, you can really reduce the NPS, very, very high numbers you can see here, right? Similarly, customer service, which is talking about the CX and chatbots, virtual bots, all of these definitely reduce the cost. This is the major cost reduction. The remaining ones, like you can generate the value as well. Compliance auto is automating the compliance. You can reduce the fines, like huge regulatory fines can be reduced using the AI, right? Looking at the another bottleneck, we can see the talent is the new differentiator, right? Because it's previously, I think we were only talking about is the infrastructure and all of that, right? But now you see the cloud adoption and all of that is along with that, you also see the human capital is a major challenge. You cannot buy a readiness off the shelf, right? You must build the culture, and silos exist in teams as much as they do in databases and systems, etc. The transition from POCs to scale production requires bridging the gap between the data scientist and the P&L owners. That's the key. And similarly, the buy versus build versus buy solution, you cannot buy everything. You have to build it, right? Because attracting, upskilling, and retaining top talent, building the GCCs, global capability centers, to scale operational excellence. And lastly, the winners will be the banks with the strongest data foundations. It is not a data science problem. It is a transformation problem. Are you ready? Start with the data governance today. Thank you. Any questions?